Yeah, so yeah, I tried to write it down. It was not coming out clear, but I think the video will do it justice. So this is the idea we are running behind. This is the daily Asian range. So this is for Friday uh, between 4 a.m. 4:30 a.m. IST and 9:30 a.m. IST. So that's the Asian range of DOW. The whole day we can ignore it. We don't need to consider what it is doing. We can just come back it into 1 hour prior to the US session, which is here. We need to notice what it is trying to do. We see that around half an hour before the market open, it bounced off of the top of the Asian range, and this is the market open bar. So in that case, it is again creating some sort of a double bottom. This is not the strategy signal we are looking behind, but it is something that can be traded as well. It's bouncing off the same level at market open. Try to scalp something like 70, 80. So what is this move? 366. Yeah, it's a $120 move, but if we can catch 80, 70, $80, that's fine on the market open. So this is 1 or 2 minutes of price action. That could give us 60 to $80. So that it is that fast, and yeah, after that what we wait for is for a clear break of either side. uh, this is the top range and this is the bottom range. You have marked it. When there is a clear break out from there, that's our signal. When there is a clear breakdown for there, that's our signal. So in this case, we are seeing that a lot of times it tried to break out, but it was after this first one, the other ones are not clean. So the first one, remember we did enter. I entered around here, and seeing that it was not going anywhere, I squared out that position on Dow. That that is the trade idea we are running behind. It can loss as well. So it would be the stop loss would be somewhere in the middle of this region. So this is 365 and 295, the $70, $35. So around 330 would be 41, 330 would be all SL. We could do that. So in the bottom range, so the breakdown, the same SL would be there, but the breakdown was cleaner. Even if we entered on the second bar, first breakout, second breakout. So even if we enter the second bar, and this is around 41 to 81, we we keep our close. This is $80. If we keep holding, we get to 120. 120 area, so that's 60 $160 of profit from a $50 SL. So that's 3R, which is, I think, yeah, really good given the context of the market that was on Friday. Now, not every day would be like this. So from day to day, we have to create our basis on what could happen that day. So for example, if we mark this day, it is never breaking down. So by the time the US, we are closer to the US. So near this area. So this is 1 hour prior to the US. So we are seeing that we are very far from the Asian range. So what we would be looking at is bouncing off the Asian range, which is bouncing either here or at the midpoint. So this is breaking down. The first move is breaking down. So we wait. Then again broke down lower and got close to the Asian bottom range and then broke out. So that's maybe even if we enter here after a clean breakout at 255 and set our SL at the midpoint, which is around 135. So that's $80 worth of SL. So our target should be $160 or so. And from 255 we got to five almost 600. So that's $350. So $80, $350 on $80 in the next few hours is almost 4.5x. So which is good. But even if we don't want to hold that, we can get the $80 pretty much from this 255 to 400. we can get $150 pretty much within what, this is 7:30 and this is 25 minutes or 30 minutes or so. So we can get out if we want at that point. But yeah, if we hold, that's what we mentioned, that multiplying the R, which has to be considered to make the bigger profits. So again, that's the idea: either breakout or breakdown. So it happens almost every day, and it should happen within the first 2 or 3 hours after the market opens. So again, yeah, it's happening around 7:20, and again, its breakdown is happening around 2 hours after the market opens. So the breakdown was much bigger than the breakout. So accuracy is sometimes it might not be totally 100% accurate. Like in this case, it's a ranging market. Uh, when we see something like this, so let's say before the market open, way below. So again, like I said, we'd be waiting for bouncing off the other range, other side, which happened, but in a very cross manner. If we lose money on this particular day, it's fine. We can do recover that in a later time. So again, uh, this is where we are. This is our level, and it is coming back around 2.5 hours after the market open. I think it's bouncing off the middle point and breaking out. If we enter the breakout, that's 240. That's a $60 SL, and we're going to 320, which is fine. We're getting that as target hit. So that's for everyday trade. I think around 4 hours after the, like 1 hour before the U.S. market open and 3 hours or 3.5 hours after the U.S. market open, that's enough for this style of trading. We don't need what is happening after hours or later in the session, second hour. Uh, there might be days like this. This is a day where we are not getting a trade, so it's not coming back to Asian range at all. So it's not coming back to the Asian range at all. There is a way we can trade this, but yeah, preferably it's better to not complicate things, but we can follow other things as well. But 8 out of 10 days, 9 out of 10 days, we are gonna get a trade. We're gonna get a breakdown or breakout of the Asian range, which is easy with this indicator that I am using, which is skill zones. Uh, but yeah, this is the idea. This is simply the idea. If we look at now setting the long-term price targets on DOW, let's say on daily, it's not very uh, complicated. We try to we can try to make it very easy to follow. So how let's remove the drugs. So how you're trying to do is mark the FHEs if on daily or weekly. You can look at weekly as well, and see if the price is or 4 hour. See if the price is respecting the FHEs. We can be more confident if the FHEs are not half cleared as well. So this all of these are okay, but let's look at it. So what you can see is it's continuously coming into this play, and this small FPG is tested. It's a little bit better in something that moves a bit, which is NAS. But on DAO, we can follow the AVGs as well. So, for example, if it goes back to 4100 area, we can expect some sort of a bounce back. But yeah, this is the idea behind the style of uh, daily bias creation. We can look into bouncing of the AVGs, but overall idea would be from 1 minute charts and very fast hands of trading. We're gonna get in, get out. Most of our trades are going to be less than 20 minutes, 30 minutes. Sometimes it can go a little bit longer when we are increasing the R. So that's about it. Uh, we can also follow all other strategies as well to find what is going on with the price. But if you look at it, it's a bit of a trend that is going on from this point. So this was 5th of August. That big breakdown that happened after the carry trade thing. It got bounced. It bounced back off the trend line, and it's not looking back since. But yeah, uh, that's the idea. If we pull back this one to this area as well, it can go like this. So it's a long-term trend that has been going on, and if we look at the longer-term picture, it is due for a correction. It seems due for a correction, then another continuation. But yeah, we'll see.